Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Follow me on X. The handle is the iChart Daily. Today is Friday, March 13th. Birthday was yesterday. I'm very good at finding trends. March is a very weird month. It's always been my entire life. Just to throw it out there, New York just went from 80-degree weather to 30 in a matter of a week. We're at war, spiritually and physically, and we're here, baby. I've been saying for the longest time that tax season during March, April, February is a weird environment for the markets depending on the longer term market structure. And from that time, Bitcoin has gone from 130,000 down to a cool 59. What am I seeing? What am I doing? This is not financial advice. This is a window to my thought process. We're going to be going over a 17-year fine-tuning technical analysis process that has been proven and proven again. Simply put, yesterday, even 2 hours ago, I said that there was a 15 to 20% play back to the CME gap, which also lines up with the 11 and 21-day moving average, and Bitcoin's up a cool 4% from there. So let's jump into it. I use visuals to help me understand where billions of dollars are going. It's that simple. Obviously, other people are doing the same thing, so that's why it's working. So simply put, Bitcoin, I'm going to go over a lot of altcoins today. Simply put, I've said for the longest time that Bitcoin has room to grow. Room to grow to form a lower high. The last high, swing high, right? What I'm looking for is waves, right? So we did this, we did this, we did this. The last high was 96 to 99,000. There is potential for us to go back to, when I say downtrend resistance, this is downtrend resistance. So there's potential for the asset to go from 96 to 59 back to fill this gap of 88 to 82,000 and potentially form another lower high, right? So 128, 98, 81 potentially. So let's now, technical analysis is chess. So basically you could plan the next move, but you don't know what your opponent's going to do. So you have to plan 2, 3, multiple potential moves thereafter so that you understand if this happens, we do this. If this happens, we do that. So now I'm going to go over the ifs and the maybes and where to set alerts and where on the chart visually could help you understand if one is going to happen or not. And that's all I'm looking to do, right? It's not like I'm some genius that's like, oh, I know exactly what's going to happen. No, I'm just constantly watching the chart on a multi-time frame aspect, and because of my experience, I'm able to interpret what's happening in the chart faster than others. So we're oversold. We were forming that bottom. On a side note, I told you, and I've been saying for the longest time, follow me on X, a lot of the time I'm waiting for a play to happen. So right now we have been waiting, 35 days of Bitcoin staying between 63 and potentially 70,000 in order for this ascending triangle to break out. If you remember in my last video, I said this looks like an ascending triangle. An ascending triangle could be a measured move to the upside that lines up with that 85,000. I like it, right? So once again, it's just constant visuals and confluencing and figuring out probabilities. So that's one thing. Once again, gaps get filled, right? That's a rule. That's not a speculation. That's not my opinion. Gaps get filled, but you have to put like a sublet underneath it because you don't know when, right? Meaning gaps could get filled 75 days later, gaps could get filled 300 days later, gaps could get filled 3 days later. But just knowing that gap is there gives me a dead cat bounce resistance visual compared to someone else that hasn't looked at the chart, has no idea what's going on with the CME gap. Most people don't even know what a CME gap is. So the first thing I'm noticing is swing down, right? Now let's play chess. There's multiple things that could play out from here, meaning chess move, we go up, form the lower high, come back down, form the same low at 64 to potentially 63,000. That's a bullish scenario, right? Because when assets stay flat while indicators form bullish structure, like higher lows or higher highs, that's hidden bullish divergence. During bottoms, the assets form hidden bullish or bullish divergence. During tops, the asset goes sideways while the indicators form hidden or regular bearish divergence. So what we're looking for is hidden bullish divergence or bullish divergence at a price range to help us understand that this and this isn't going to happen again, right? Because this was a bear flag, all right? And a bear flag is a potential measured move, right, to the downside. And if this were to be another bear flag, then that would be another measured move. And to figure out where the measured moves go to, someone left in the comment section, how do you figure out liquidity zones? So you look on a longer time frame, you look where candle patterns have formed. When you look at previous candle patterns have formed, what I mean by that is this is a monthly time frame. Bitcoin stayed around 72,000 for a very long time. So this looks like a huge, huge support level. And Bitcoin went from 130 back down to there were previous buys, previous liquidity. You understand? So with that being said, if we were to break down, 60,000, but this is the CME chart. This, unfortunately, the CME chart's major support at 60,000 does not confluence and line up with other charts. And I like using Bitstamps because it shows a very, very long history. It shows all the way back from July 2011. You want more data. You don't want Coinbase's chart, which only shows like this or whatever it is. I want to know what the macro swing highs and lows were to help me understand trends, probability, percentages, right? The halvenings, how long, time frames. What I'm trying to get at is one chart is showing me support at 60 to potentially 65,000, but another one is showing me support down at 48,000. And the reason why I'm showing you this is if this is another bear flag to the downside, then that shows me that we could, as you could see, right? It's like one to the downside, right? It's like one to the downside. And if we were to do this, something like this again, we could see a bear flag to the 48,000, right? 48,000, potentially 53,000. How do I know that's going to happen? If certain things play out, meaning we need to see if this goes up, fills the CME gap, and comes down to 65,000. Why do I think it's going to come back down to the 65,000? Because when I put on the indicators, they're in section B. Section B is when your MACD is below the 0 line and your RSI is below the 50. And especially your stochastic RSI is as well below the 50. When everything happens in waves, but the waves topple or see resistance below, that means previous lows are going to be not only retested, but potentially broken, right? When the indicators are in section A, right, your previous lows aren't retested if the asset doesn't break the 0 line, right? So the previous low here was 39,000. We went up, consolidated, and only went to 49,000. The asset went up, death cross, broke below, but once again, section A, stayed above the 50, stayed above the 50. The asset went from 49,000 to 109, crashed, right, or consolidated is the right term to use, the correct term, but the low was 75, way higher than 50. Why? Because we stayed above the 50 and the asset came down and stayed above the zero line. So once again, understanding the importance of where your indicators are help you eliminate the emotions, meaning there are a lot of people today seeing Bitcoin up $2,500 and they're like, this is it. But understanding that unless we break this, and unless we break this, and unless we break this, we're not breaking those beautiful purple lines. And that's the importance of using moving averages as well. This is my indicator. I made it. The 11-day moving average is the dotted. The 21-day is the solid, and depending on the time frame you're looking at, it changes color from white, which is bullish, to purple or pink, which is bearish. Understanding that the lines are still purple and the asset remains under the 50 line shows me that we could grow but get rejected from not only the 75 but potentially the 83.5. And when I put on the CME gap chart and I delete everything, and that also lines up with the 11 and 21-day moving average, which also lines up with that liquidity level of the CME gap, I have a very, this is, you're catching a dead cat bounce. That's what this is. And understanding that the dead cat bounce is still in section B, these lows could potentially be broken the same way these lows were broken. So to help you understand the ifs and the maybes now is you have to set alerts on indicators to notify you if we're getting rejected, meaning is the 2-day going to break above the 50? I'm setting an alert there. The 3-day, is that going to break the 50? I'm going to set an alert there. Is the 4-day stochastic RSI going to break the 50? I'm going to set an alert there. Is the 5-day going to break the 50? I'm going to set an alert there. Because you can see we're about to go up on the MACD. But if we see rejection and we come down, you don't want to think mega bullish if you're getting a golden cross in section B. You want to think dead cat bounce and understand if and when the wave does go the other way, it is a way worse situation. You don't want to get super bearish when you're getting a death cross and the asset is in section A. Why? Because it's a consolidation, but as long as it stays above the zero, you're making a higher low. And then once you do have the vice versa, once you do have the wave change the other way, you're having massive green candles. So right now, I'm actually thinking a little bit more bearish, like yes, there's a 15-20% play, but if you think bearish, this was a 33% play. This was a 40% play. And you have bearish momentum on your side because everything is still coming down. Another visual is the longer time frame. I do see it below the moving average, right, on the monthly. I see it below the 50 line in the moving average. I see it below the 50 line in the moving average. I see it below the 50 line, and it's about to break the moving average. So that shows me that momentum is changing on the weekly. I like it. I'm curious to see if it goes up to this range and comes down and forms a double bottom, that's bullish. If it comes down and breaks this low and goes to 54,000, then I know that whole process that I just told you needs to happen again. It needs to form the bottom, needs to stay flat, needs to pop up, needs to come back down. We need to see on a macro level, meaning these are the LTTs, right? Remember I told you LTTs, weekly, 2-week, 3-week, monthly. We need to see a macro double bottom, triple bottom, V-shaped recovery, something. As of right now, this is just a dead cat bounce with a short-term play and a potential all profits being depleted and coming back down to 65,000 or lower. So with that being said, let's potentially look at some XRP long term, right? Once again, you want the chart that's showing you when it was even pre Coinbase approved, right, which is down here, 0.006 cents. So higher lows, higher highs, we form this symmetrical triangle, we broke to the upside, right? Now we're here. Doesn't look great. Um, the first thing I think of is we're oversold, bro, right? Common sense, right? We're down 70%. Is there room to grow on alts more than Bitcoin? Yes. Another chart I'd potentially be looking at is the altcoin versus Bitcoin chart to see where it stands, where its indicators are, and to understand that this potentially could be a descending triangle, form another lower high somewhere around here, right, where previous resistance levels were, right there. And this would be, if it does find support here, you're looking at a cool 20% out of here. And then I'm curious what this looks like. Downtrend resistance, right? Downtrend resistance. Yeah, I mean, you know, below the 0 line, below the 50 line, below the 50 line, dead cat bounce, but make sure you take your profits. Um, Not financial advice, but any asset down, you know, 70 to potentially 60, 50%. This is where I'm telling the amateur investors, like, listen, I'm putting 30, 40% in. Like if you're not in crypto and this is the first time you've heard of it and you're looking to dollar cost average and put some money in, yeah, put like 30, 40% of what you're comfortable putting in the asset. And this is long term. Like just chill. Let 2027, 2028 come around. Let the halving happen. Let adoption happen. Let the bank start adopting it. Let ISO 20022. Let the dollar collapse. And yeah, we're all good, right? So we're here. So 60%, there's a play. What I do is when something's going down, I look at previous support levels to see where there's going to be present resistance. So you could see here from, let's just say, $1.68 to $1.84, there's definitely some levels here to see some plays. And then I just want to figure out, like, it's 16 to 20%. We just said on the XRP, well, I just said on the XRP chart, looks a little bit more clearer that we're having this downtrend white resistance, this yellow support, and there is definitely play because you can see wicks show buying pressure on the bottom, wicks show selling pressure on the top, and we're getting buying pressure. What I would do is set an alert at like this level here, 2044 to potentially 2060, and once that breaks, you're going up versus Bitcoin. Bitcoin's going up, which gives you a double positive confluence visual that XRP potentially could go up. Now, the negative thing that I'm seeing, right? This looks like a double top. A double top. First of all, XRP had a parabolic. People really just need to listen to me and try and learn this because it's honestly amazing how people do not remember that in November 2024 it went from 49 cents up 600%, 700% to $3.80. They just forget that that happened. So like the most important, like the whole reason me saying that is like this is the previous low, bro. Like these are the lows right here. Like we were chilling around that 50 cents. If you remember me telling you, I was telling everyone from 30 to 50 cents, like we're buying, we're buying, we're buying. XRP formed a beautiful W pattern on a weekly time frame. This took a cool 931 days of doing nothing and accumulating cash in the asset and waiting for the play to pop off. The play popped off, boom, right? And from there, we formed the double top. We went from 50 cents to 41, consolidated, popped up again, formed a double top. Now, I want to show you one thing. I know what the indicators were doing during this market structure because exactly what I just told you previously. During a top, the price action stays flat while what? Indicators do bearish things. Bearish things are wave patterns make lower highs or lower lows. This price made a higher high and everyone was getting fooled out while your MACD on a macro level, the wave came down, came up, and then came down, formed a lower high. RSI came down, came up, formed a lower high. That showed me that this level of $1.83 was potentially going to be broken. And while everyone else thought that the pattern was doing this, like this cone pattern, right? And we were going to do this, and then this, right? $5. 589, bro. 589, bro. Yes, yeah, I've been around since that long. Everyone thinks $589, but technically I think $5.89. So what I was trying to say before I started rambling on was this looked like a double top, right? Now, in order for what's happening right now, I think is a confirmation pattern to the downside, potentially. So what was support, if it's used as present resistance, that's a confirmation pattern. So support was what? This $1.68 to the $1.87 level. You could see here we dropped to $1.33 all the way down to $1.09, but you didn't get there because the news was telling you we were going to war or whatever else. So we went from $1.31. If we go up and see resistance from the $1.68 to the $1.87, that's a confirmation that we're definitely coming back down to not only retest the $1.30, but we could definitely go lower. Now, delete everything, not that, delete the drawings, we're good. Turn off everything and just put on your moving averages, right? 11, 21, 30, 50, 100, 150, throw them all in there. This is the 30, so this is my indicator, the 11 and 21. This indicator, I know it says 50, 100, 150, but I believe I changed it. Yeah, I changed it to 30, 50, 100. And what it does is moving averages give you a visual of where price could be depending on the time frame that you're using. So if the red line is a 30-day moving average, that shows you where price potentially could be in 30 days or where it could be weighted in 30 days. Same thing with the green, which is the 100. And the, no, what did I say? I'm sorry. Yeah, 30, 50, 100. So 30 days, 50 days, 100 days. The most important thing is what the waves are doing. Are the shorter time frames above, or is it having a death crossing going below? As of right now, if I turn off XRP's visual, what does it look like? It looks like the 30 line is crossing the 50. It did, death cross number 1. And it looks like it's about the death cross number 2. And if we look in the past, this has happened once, twice, 3 times. What I am very good at doing is seeing this, understanding what happened in the chart previously, and then using that type of trend to see what happens now. And 9 out of 10 times, it's correct. Why? I don't know. I honestly feel like the smart people, the rich people, don't want people like me to tell people like you, because eventually we could just come up with a bot or an AI program that takes all these visuals and calculations and eliminates human error. So anyway, once again, it's just a visual, right? When the shorter time moving averages are all in a line, 11, 21, 30, 50, 100, bullish. Once you have that first break in the ice, if I turn on the visuals, you can see it gets a little sloppy, but you can see here price action broke down once the purple went below the red, red goes below, and then you're down here, right? Now, when did the market officially bottom? It bottomed, it looked like when the 100-day death crossed below. We're here. We're literally here, right? Just to give you a visual. We're here. Well, no, we're technically here, okay? We're technically here, okay? Because we broke below the price candles, broke below the 100-day, broke below the 100-day, and broke below the 100-day. So now what I want to see visually is, when did the candle start breaking above? When did the candle start breaking above? When did the candle start breaking above? Did we make lower lows? Did we make the same lows? And what is the probability of these two scenarios happening again here to help me understand the visual and where I think stuff is going to happen, right? So if we turn this on, now stuff, I'm going to give you a quick tip. If stuff starts looking messy like this, go longer, okay? Go longer. If there's data. If the 3 week is too crazy, go longer. You can see here, have we ever stopped at the green? Like, did the bear market end at the green? No. We've gone to the green. We've gone to the yellow. We've gone below the yellow. 2 week, below the yellow, below the yellow. So who am I to assume that we're stopping at the yellow? And what I think what happens now, when you break one moving average, meanwhile death crosses are on the horizon, you start to have dead cat bounces, and it's just another visual to help you understand that we could go up, but we could use these shorter time moving averages as a visual of resistance. Excuse me. And if that lines up with $1.79, $1.98, right? I would use the moving averages as levels. And if they line up with previous liquidity levels, it's just another confluence. So once again, like this $1.60 to $1.76, first level. The 11 and 21 day moving average goes from 84 to $1.95. Then it goes from $2 to potentially $2.15. You know, I'm going to use the first moving average first and take the majority of my profit. But I'm pretty sure like all the coins are pretty much doing the same formation, right? If we go to XDC, right? We're below the moving averages. There's a ton of room to have a dead cat bounce, see rejection, and potentially come all the way back down. XDC's levels are .04 all the way to .054, and I would use the bottom of the double top, right? 1, 2, M patterns of bed. This resistance, this like support level right here of the 55 cents lines up with around the range of the moving averages. So there's room to grow, but just, you know, understand that it could come back down. If it does come back down and forms a double bottom, that is tremendous. And then it could go back up to these levels over here. And you're buying at support, right? If I turn off everything and delete everything and I just draw a straight trend line, you could see here, huge opportunity, right? Huge opportunity. You're looking at 52 to potentially 70% back to that level, right? Back to this level right here. Liquidity. Where was there resistance in the past? The resistance in the past was, like I said, 0.05, 0.06 right here, right? This is what I'm looking at, even here. 1, 2, I'm just going to the right. 3, 4, 5, 6, 7, 8, going to the right. 7, 8, 9, 10, 70% out of XDC potentially. If we go to Solana, right, same thing. The first thing I'm looking at is where was their previous support levels? Is there room to grow back to them? And what are they? And then what you do is you do this for all the coins and you figure out what your risk reward is and what the play is, right? 35% back to those levels for Solana. Chainlink. Now, I would take it a step further, do these charts and see which one looks better versus Bitcoin on the longer time frames. Like one that looked great for the longest time was Tron. Not a bond. Yeah, bro. Tron ripped since 2020. Amazing chart. See, now here's the thing, right? You had a death cross and a breakdown on a monthly time frame, and we're in section B on the stochastic. I'm curious if we come up and Tron goes up back to, let's just say 36 cents, but your indicators form bearish divergence. I'm curious if that happens. Tron looks great. Again, Tron looks better than the previous coins I just looked at, right? Market structure wise, I don't know if you see it right away, but this looks like a great market double bottom. W's are good, M's are bad. See it? Batman ears, right? Batman ears are bad, but if I invert it, W patterns are good. Alt I, if you're looking to do that. And then this shows me, once again, levels of resistance. This looks like it's going back to 31 cents. Excuse me. This looks like 10%. Now the only thing is this is the last swing high, and then this is your next swing high, and you know, like your highs you're looking at. So 31, 34, 36, and the reason why I say that has a higher probability is because your indicators are where? Section A. Your MACD is about to golden cross and break above the 0. I would set an alert here at the 0.018. I would set an alert at the 52.95 because I'm curious to see if we go back to this level and break it, 58.31. But once again, shit pops off. That's a street term in Brooklyn here. Shit's going to pop off if it breaks the 50 level. So I want to be in the play when it happens here, and then curious and potentially take my first profit level if I see resistance here, right? But I'm curious to know chess, not checkers. Chess is this, and then chess is understanding it could do this and this. Chess is understanding it could do this and this. Chess is understanding it could do this, this, and this. And I like the longer time frames, and longer time frames will predict shorter time frames outcomes. I do like that this formed a beautiful double bottom. Once again, 10% play. Like it, like it, like it, like it. And I like it long term, meaning like because the indicators are in section A, that means like 27 cents could be forgotten. Like we could do this, do this, do this, do this, and just continue to the upside for Tron. Once again, if you just continue to the upside, if the indicators are in section A, you can see here, once the MACD broke above right there on January 2023, if you just look down, the RSI broke above, stochastic was above, we just went from 5 cents all the way up. Consolidations, right, death crosses, breaks above, but the RSI never broke below. Broke below here, which is why we came down and we formed this double bottom, but now we're going back into section A, showing me that once again, the higher lows and the higher highs are on the horizon. Each bar, so section B, section B, section B. First thing you should put on is your 11 and 21 day moving average, notifying you that, yeah, you could have a dead cat bounce. We're having an inverse head and shoulders pattern formation playing out right now as we speak. Inverse head and shoulders, once again, I'm looking at lows, and it looks like the lows are forming right this low. We came down, formed this low, came up, came down, and now we're forming this low. This is an inverse head and shoulder. That shows me that we could go back up and retest the 11, and not only that, but go up and retest the 21. So once again, I just showed you a double confluence move because we're in section B, which shows me the move could go up to the 21-day moving average. And we are having an inverse head and shoulders, which shows me we could have the move back to here, 12 cents to 13 cents, which lines up with the 11 and 21-day moving average. Let me see here. Yeah, and then from there, what needs to happen with H bar is the same thing I said with Bitcoin. It needs to go up, form this macro high, come back down, see if we're going to have a double bottom at this 9 level, not 0.092, then go back up and retest the 12 cents right here, 12 to 13 cents. And while it's forming this macro double bottom, the indicators are not making lower highs and lower lows anymore. It's going to make a higher low, showing us that potentially we could fill H bar's W pattern potentially back to here or even here, right? And that would be amazing. But all of the other stuff needs to happen first. In short term, it's bullish. It's definitely going up. But understanding that it could come back down to the 0.094 or the 0.088, and understanding that all of your profits could be wiped out is key. And it's the same thing for all of these, bro. Like, it really is the same thing. We're going to go back to the 11 and 21-day moving average. You're in section B, so understanding that, once again, the profit's going to go down. But ADA, you're looking at 21 to potentially 35%, 30, I'd say 33 cents is the first take profit level. And that's the video, folks. Love you. Appreciate the support. Any comments, questions, concerns, leave it in the comment section. Dead cat bounce, section B, not the best scenario. The best altcoin that I looked at so far is Tron. It's been Tron for the longest time. Not my opinion. It's just the indicators are in section A, so if and when consolidations happen, previous lows are not being broken, but yet just retested and staying flat. Love you. Um, if you know anyone that could like benefit from these videos, share it. I appreciate it. Another thing, I got rid of the Discord because it was just, I felt like I was doing the same thing. Not I was doing the same thing. I'm looking to grow my X and I'm looking to grow my YouTube channel. My Discord, I mean, not that it does nothing for me, but I felt like it was taking away views from X and YouTube. And instead of posting on Discord, I just posted those thoughts on X and YouTube. The only thing was the communication access with a lot of you guys and girls. Um, Meaning, I guess some of you don't have X, or some of you don't feel comfortable emailing me questions, comments, concerns, and that was definitely a main area, main avenue of me talking to my community. So if you're interested in me making another Discord, once again, I'm just gonna be posting the same things I do on X. Post it in the comment section that you're interested. If I get a decent amount of comments or likes, I'll make it again. Love you guys. Enjoy the day. Stay safe.